Natural gas prices in mid-October 2024 remain volatile, influenced by factors such as weak global LNG supply growth, which is expected to slow to 2% for the year, well below historical rates, and growing demand, particularly from Asia. US Henry Hub prices are forecasted to stay below $3 per million BTU in the short term, with potential increases in 2025 due to tighter supply as European markets increasingly rely on LNG. For leveraged ETFs, BOIL could see upward movement if colder winter conditions or supply disruptions tighten the market further, while KOLD may benefit from any continued weakness in demand or oversupply scenarios. The UNG, United States Natural Gas Fund, outlook remains highly dependent on winter demand and market fundamentals, but increased volatility is expected. G'day folks, welcome back to another update for natural gas. Before we get started, make sure you hit that like and subscribe button and share the video to support the channel. So first we'll look at the trends. So on the monthly, we're still bullish with our CCI above its moving average. You can see there the price is just still hovering in that moving average range, so possibly about to break up. But looking further into the lower charts, we've got the weekly. That's still bullish as well, and that's also above the moving averages of the price chart, but that's starting to weaken. And on the daily, we've already broken down below those moving averages on both the price and the CCI, giving us a bearish momentum and trend. If I go to the micro charts, again, we only use the daily as a reference. We only take short trades on the intraday time frame, and I'm using the hourly here. You can apply this to the 2 hour or the 4 hour. There is a continuation of a downtrend, but notice we've got if I zoom out on the 1 hour chart, we do have a bullish divergence, so higher lows on the CCI versus lower lows in that same range on the price chart. Now we expect it to retrace to the upside, and the minimum retrace level will be from that low, and we go back to the previous high before that divergence started. So we expect the minimum retrace back to, let's draw it up here, between that 23 and that 38% level. So we expect the price to break into that level as a minimum. So it could actually just touch it and repeat further to the downside, or if it breaks higher, then we'll take new measurements and see how far it goes. The key area to look out for is if it breaks above that 61%, we may see a reversal. But at the moment, still continuation of a downtrend, but just watch for this little bounce. So for BOIL on the monthly, there is no CCI, but you can see there's pretty strong downtrend on the price chart. On the weekly, we still have this bullish divergence on the CCI versus lower lows on the price, and that's still continuing a downtrend on the price. But again, just be careful of this bullish divergence. We might see a bounce some point in the future. Can't predict exactly when. But on the daily as well, if I zoom out, you can see there it's actually bounced off this support at 814, and it's just about to touch that support level again, probably in the next hour or two. But the daily CCI is still pretty continuous, a bearish downtrend. So again, primarily bearish trades should be taken. If I go to the micro level, using the daily as a reference, I only take short trades. You can see there we had a bearish divergence, a very strong bearish divergence there versus higher highs on the price. It fell down well below the 23-38% level. Let me just mark it as a reference. So it's already broken below that minimum level, and it did it before our last update. But you'll notice it's gone well beyond 100%, and it's approaching that support at 814. There's no bullish divergence like there was on natural gas, and that's a continuation of a downtrend. Very slight uptick on the CCI, but nothing too dramatic. So continuation, and we may see touch this before possibly bouncing, but at the moment, continuation of a downtrend. For KOLD on the monthly, there's no CCI, but you can see it's broken above its moving averages, so giving us a mediocre bullish momentum. On the weekly, there was a bullish divergence back here, and it bounced. And that's still trending higher on the weekly, and so is the price, so still upward momentum. And on the daily, zoom out on that, you can see there we're in a bullish momentum as well. No sign yet of a pullback, and that's actually bounced off or broken through that previous support at 61.65, and now approaching this minor resistance at 81.14. So again, further upside to go on KOLD. And if we go to the micro charts, based on the daily, only long trades. So you can see there we also had a bullish divergence on the 1 hour CCI versus lower lows on the price chart. Bounced, went well beyond our 23-38% minimum level. I'll mark that as well. And it's actually currently resting just short of that, or about that 100% retrace level. So again, this could still rise further. There's a slight pullback on the CCI, but nothing too dramatic. It could just be a bit of a pullback, then a further upside to be taken. So just be aware of that. But again, 100% retrace on that bullish divergence. Lastly, for UNG, medium or neutral positioning on the CCI. There's no bullish or bearish movement yet. The price is very bearish, so just be aware of that. We might see a bit of a break to the upside possibly. We do have a bullish divergence on the CCI on the weekly versus lower lows on the price, and that's still dropping off. Again, no real dramatic upswing. And on the daily, again, we had this hitting this support at 12.57, and looks like it currently is approaching that support level again, with the CCI still dropping. There's no sign of a pullback to the upside yet. Going to the micro charts, again, using the daily as a reference, only take short trades. You can see there would have been some nice little positions taken. And the way you exit that, let me just mark in the arrows there. So the way you would have taken these trades, you could exit it if the CCI breaks into that moving average range. So you can see that you would have exited there and then re-enter it again once that CCI breaks out of that range. So you could have multiple trades could have been taken in this later one. Or you can let it wait until the price breaks into that moving average range, which is what these arrows and crosses are indicating. So there's a couple of ways of exiting. It's up to you really how you do it. The CCI lets you take advantage of. You can see there almost at the bottom of that little range. Another right at the bottom of that range there again. Another entry there, bottom of that range. And currently, if you entered again at that point when the CCI broke below it, you would have still probably break out or close it out about that point there as well. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.